Understand what all things are asked first of all. From the following information, pass necessary journal entries. There will be 11 journal entries. So accordingly you leave the space and make the format of journal. And prepare revaluation account. Revaluation account will require around 10 to 12 lines maximum. And balance sheet. Now they will always ask you balance sheet, but we also have to make partners capital account. Whenever we solve such long questions, the further chapters also, whether asked or not, we always have to make partners capital account. If current account is given, then partners current account also. Are you given with current account?
Yes.
Where? Question 13. No partners current account is given, so we have to make only partners capital account and balance sheet.
Sir,
So, yes?
are we going to write narration?
Yes, we are going to write. 11 entries with narration, that's what I said. First question I am explaining in detail, so you will take full lecture. And tomorrow one more I will solve similar one, so that I come to know really you understood that or not. So 11 entries format, revaluation around 10 to 12 lines, partners capital account 6 to 8 lines, and balance sheet 1 page. Make this formats. Journal entries in the books of Sajan and Nirmi. Doing it. Yes, silence everyone. So date, particulars, LF number, debit and credit. Revaluation accounts, format is like P&L account, particulars and amount both the sides. Around 10 to 12 lines. Partners, capital account 6 to 8 lines with 2 columns, Sajan and Nirmi. Lot of noise is coming. Balance sheet of Sajan and Nirmi as on. What is the date of balance sheet given? 31/3/70. In bracket you can mention after reconstruction. Exactly 2 minutes from now I'll start with the solution. Make it fast. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Now understand the procedure of solving the long question, because similar one you'll be doing in homework also, so that you're able to answer it to me tomorrow when I ask you. Very first step, you'll write the balance of capital. Put tick on capitals. Do you find 80,000 and 50,000? Do capitals have debit balance or credit balance? Credit balance. Right on credit side. No one should be talking now. By balance brought down. Sajan 80,000, Nirmi 50,000. Are you all clear with this? Capital balances will come in partners capital account credit side with pencil number it as 1. First step is, in any question of even the next chapter 5 and 6, there is the first thing we will do, capital balances will be recorded. Okay? Now, as we studied the concept earlier, distribution of reserves, that we will do. See on the liability side of balance sheet, which reserves do you find? And even profit and loss account is a reserve we studied. Put tick on general reserve, put tick on profit and loss account. Anything else on liability side in the nature of reserve? Any fictitious asset on asset side? Means advertisement campaign, research and development. Even profit and loss account can there be on the asset side? Not there. First, we will pass the entry for distribution of these two things, general reserve and profit and loss account. Did you all put tick in balance sheet? With pencil number it as 2. That is the second step. with pencil number it has to. First step balances, whichever ledger accounts we are making, like here we are making partners capital accounts or capital balance. Second step will pass the entry for reserves and fictitious assets distribution. Got it everyone? So we studied the entry in the earlier period. Raise your hand for general reserve. What would be the journal entry, and we discussed it also in the beginning. Raise your hand. For general reserve, what will be the entry? Dash.
General reserve to partners capital.
Yes, specifically what will be that? General reserve account debit to Sajan's capital account to Nirmi's capital account. In which ratio will distribute? Write down first entry. In the heading you can give 31,317. Did all entries are on 31,317. General reserve account debit 80,000 to Sajan's capital account to Nirmi's capital account in old ratio we have to do 5:3. So 80,000 into 5 by 8, 50,000. 80,000 into 3 by 8, 30,000. Show that distributions in bracket means calculations. All of you show the calculation in bracket. Every classwork example and homework example, calculations should be shown in bracket. In exams, you may not. This is when you revise, you must be able to understand how the figures are obtained. Okay? Being general reserve distributed in old ratio. Okay, now effects be attended. Two partners capital. We credit it. So partners capital we will write on credit side. Name of opposite account by general reserve account. In Sajan's column 50,000 and in Nirmi's column 30,000. I repeat, two partners capital. So in partners capital we will write on credit side. Name of opposite account by general reserve account. Sajan's column 50,000, Nirmi's column 30,000. Second effect is the reserves account gets closed. It will not come in the balance sheet now. Liability side reserve means it's which balance? Credit. And we? So account gets closed. Therefore we have taken it. Now it will not come in the balance sheet. So visible is only one effect, but two effects are taking place. Visible is only one effect, partners capital account on credit side. One more effect is taking place but not visible, that is the general reserve account is getting closed. Is everyone of you clear with this? So what is the second effect? Invisible effect. General reserve account gets closed. Are you all clear with this? Exactly same way do profit and loss account on your own. All of you. Exactly same way do profit and loss account on your own. Check it everyone. Profit and loss account debit 48,000. So this objective questions we already did in the last period where we passed this reserves and now it comes in the long question. Okay. To Sajan's capital account 30,000. 48,000 multiplied by old ratio 5 by 8. And to Nirmi's capital account 18,000. 48,000 into 3 by 8. Old ratio we have distributed it. Okay. Narration also you would have written on your own being. Profit and loss account distributed in old. It should be accumulated profit. Liability side P&L account is appearing means it is accumulated profit. Being accumulated profit distributed in old ratio. Again, two partners capital. So in partners capital, it will come on credit side, opposite account by profit and loss account. Two partners capital. So partners capital credit side, opposite account by profit and loss account. Sajjan's column 30,000. Nirmi's column 18,000. Any confusion in this? The other effect is profit and loss account gets closed. So only one effect will be visible. Understood this? So this is the second step. First step, second step, distribution of reserves and fictitious assets. Third step, below the balance sheet, all the adjustments of revaluation will be done. Now this we are doing today for the first time, so I'll explain it to you thoroughly. And tomorrow I'll ask you. So understand it properly. Third step, below the balance sheet, we'll do adjustments of revaluation. Partners decided to revalue the assets and liabilities of the firm and to distribute profit in the ratio of 1:1 for future. There is new ratio. This shows reconstruction is taking place, and that is the reason they are revaluing the assets and liabilities. First, the value of land and building is to be increased by 10%. Listen carefully now. Asset side, land and building is 1,40,000. It is to be increased by land and building on the asset side. Do you all find 1,40,000? Now, the value of land and building. Yes, the land and building is to be increased by 10%. So 1,40,000, 10%, 14,000 is our profit. Value of land and building is increasing, so it is our profit. Any confusion with that? Profit means we will credit revaluation, and what we will debit is land and building. So write down land and building account debit. $14,000. To revaluation account 14,000. Raise your hand who did not understand this. All are clear with this? Being increased in the value of land and building. Understand this properly, it is very simple. And chapter 5 and 6, 90% of you will be banking upon this revaluation only, rest you will not be able to understand. So your entire marks in exam will be dependent on revaluation adjustments only. This is the only thing you will be able to do perfectly well. Rest will be majority of yours beyond limit to understand. So understand this topic perfectly well. It is a complicated chapter, the rest of the parts are complicated in further chapters. Okay? Anyone who is not clear with that? Now to revaluation. So in revaluation we'll write it on credit side. By land and building account 14,000. Any doubt with the first effect?
No, sir.
Now listen, land and building is an asset having debit balance. Land and building has debit balance and we debit it again, debit plus. We will add in land and building. Put tick on land and building. Here no need to give headings in balance sheet. Straight away you can write land and building 1,40,000 plus appreciation. Yes, decrease is depreciation. Increase we call it as appreciation. Okay. Appreciation 14,000. So 1,54,000. Understood it everyone? I repeat it again. To revaluation. So in revaluation we will write on credit side. Opposite account by land and building account. Land and building has debit balance and we debit it again. So add in land and building. Other way around, even if you don't understand this accounting aspect, it's a profit. So profit will come on credit side. And land and building's value, is it increasing or decreasing?
Increasing.
So add in land and building. Land and building's value is increasing, so add in land and building. Any confusion in this?
No.
Value of machinery and furniture is to be reduced by 40%. Asset side, can you see machinery 80,000? Furniture 30,000. Now, machinery and furniture is to be reduced, means it's our loss. Value of machinery and furniture has gone down, so it is our loss. Loss means revaluation account debit. And what will credit is to machinery account and to furniture account. Got it, everyone? So, write down. Revaluation account debit to machinery account. Now machinery is 80,000. 80,000's 40% loss is 32,000. Any confusion in this? To furniture account. Furniture is 30,000. 30,000's 40% the loss is 12,000.
44,000.
Anyone having any doubt in this? Revaluation account debit with 44,000. I repeat it. Machinery's loss 80,000's 40% 32,000. Furniture's loss 30,000's 40% 12,000. So revaluation debit with total 44,000. Any confusions? B. Decrease in the value of machinery and furniture. Now understand the effects. Revaluation account debit. So in revaluation account we will write on debit side. Both the opposite accounts. To machinery account 32,000. To furniture account 12,000. Raise your hand who did not understand the first effect. Revaluation account debit, so revaluation on debit side. Okay. Now machinery and furniture are assets. They have debit balance, but we credit. Debit, credit, minus. Put tick on machinery and put tick on furniture. Machinery 80,000 minus depreciation 40%, that is 32,000.
48,000.
Outer column 48,000. Furniture 30,000 minus depreciation 40% 12,000.
18,000.
So outer column 18,000. Are you all clear with this?
Yes.
I repeat it once again, be attentive. Revaluation account debit. So in revaluation we will write on debit side both the opposite accounts, to machinery to furniture. Machinery and furniture have debit balance, but we credit, so minus from machinery and minus from furniture. Other way around, it is a loss, so in revaluation it will come on debit side. Value of machinery and furniture is going up or going down? It is decreasing, so minus from machinery and minus from furniture. Any confusions? Next. 1,000 of bad debt reserve on debtors is, unlike the word not. Normally, what entities we study, when we provide bad debt reserve, what entity do we pass? in this chapter? Revaluation account debit to bad debt reserve. When we provide. Not required, so reverse entry. Bad debt reserve account debit to revaluation. 1000 is not required. Understood that everyone? Get down. Bad debts reserve account debit 1000 to revaluation account 1000. Got it everyone? I repeat, normally when we provide for bad debt reserve, the entry is revaluation to bad debt reserve. Now it is not required, we have to withdraw it back. So reverse entry will be passed, bad debt reserve account debit to revaluation. Any confusions? Being BDR not required. Being BDR not required. Now, to revaluation account, so in revaluation it will come on credit side. Name of opposite account by bad debt reserve account. $1,000. Understood that? And bad debt reserve account debit, it's not required. How much from debtors BDR is already subtracted? 1500. From that 1000 is not required, means what is required? 500. Now we will minus only 500. I repeat it. From debtors, see the balance sheet of the asset side. How much BDR is already deducted from debtors? 1500. Presently we have BDR of 1500. 1000 is not required, we have withdrawn it back. So now how much bad debt reserve will be remaining and required? 500. Now from debtors we will minus only 500. Put tick on debtors. Asset side debtors 40,000 minus bad debt reserve 500, in bracket you will show 1500 minus 1000 not required. So outer column 39,500. Are you all clear with this?
Yes.
So two effects of bad debt reserve are revaluation account on credit side and minus from bad debt reserve. Is everyone clear with this? Anyone having any doubt in this? Anyone who wants me to repeat it again? Further. 1500 repairing expenses required for stock. Expense for expenses and losses, revaluation account will debit, and because of that stock value will decrease, so to stock account. Okay, the expense is required for stock. So head down. Expense therefore revaluation account debit 1500. What you credit is to stock account 1500. Are you okay with this?
Yes.
Being repairing expense on stock. Now, revaluation account debit. So in revaluation we will write on debit side opposite account to stock account 1500. I repeat, revaluation account debit. So revaluation on debit side opposite account to stock account 1500. Got it everyone? Now stock is an asset and has debit balance, but we credit debit credit minus from stock. Put tick on stock. Stock 31,500 minus decrease 1500, outer column 30,000. Are you okay with it? Stock is a current asset, so you cannot write depreciation. Depreciation is only on fixed assets. Any confusion in this? So simply decrease. Once again, required expense of repairing on stock. expense. So in revaluation it will come on debit side, and because of expense stock value will decrease. So minus from stock. Understood that everyone? Don't talk in between. Next. 1500 out of creditors is now not to be paid, which is to be recorded in the books. Now, we don't have to pay to creditors, so it is our profit. We don't have to pay to creditors, so it is our profit.
Yes.
Profit means credit revaluation, and what will debit is creditors account. So, creditors account debit. $1,500 to revaluation account. 1,500. Anyone who did not understand the journal entry? Tomorrow I'll be asking you every journal entry. All of you are able to follow this? Being amount not payable to creditors. Being amount not payable to creditors. Now, two revaluations. So in revaluation it will come on credit side. Opposite account by creditors account. 1,500. Okay, two revaluations. So revaluation credit side, opposite account by creditors. Now, creditors have credit balance, but we debit. So credit debit minus from creditors. Put take on creditors. Do you find 32,000 minus not payable 1,500. Outer column 30,500. Got it, everyone? I repeat it again. Two revaluations. So revaluation on credit side, opposite account by creditors account. Creditors have credit balance, but we debit, so minus from creditors. Other way around, we don't have to pay to creditors, so it's our profit. Profit will come on the credit side, and we don't have to pay to creditors. So should you add in creditors or minus? Minus from creditors. Is everyone of you clear with this? Further, outstanding expense 10,000 and income receivable 2,000. Now, outstanding expense. At only final accounts we used to do expense to outstanding expense. Now expense will get substituted with revaluation. So write down revaluation account debit. To outstanding expense account 10,000. Being outstanding expense unrecorded. Now revaluation account debit. So in revaluation account we will write it on debit side. Revaluation debit. So revaluation debit side, opposite account to outstanding expense account. $10,000. Are you all clear with this? An outstanding expense will come on liability side. 10,000. Okay, outstanding expense will come on liability side 10,000. Understood the two effects, everyone? Anyone have any doubts on that? Same adjustment. Income receivable is 2,000. So outstanding income account debit means income receivable account debit. $2,000 to revaluation account 2000. Normally it is outstanding income to income. Now to income will become to revaluation. Okay. Being income receivable unrecorded. Yes, Dhruv, any confusion? Don't talk in between. Two revaluation, so revaluation will show on credit side by income receivable account or outstanding income account 2000. Are you okay with this? An income receivable will come on asset side.
2000.
Income receivable will come on asset side. 2000. Any confusions in this? Okay, two revaluations. So revaluation credit side by income receivable and income receivable will come on asset side 2000. Did you write this down?
Yes.
Last adjustment, investment is to be shown at its market value. Now see asset side, investments are 20,000.
Yes.
In bracket market value is 18,000.
Yes.
So it's a loss of 2,000.
Yes.
We have to show it at market value means there is a loss of 2,000. Dash and then you'll be addendum. Loss, so revaluation account debit 2,000 to investments account 2,000. Are you okay with this? Being decrease in the value of investments. Now revaluation account debit. So in revaluation we will write on debit side to investments account 2,000 and investments have debit balance but we credit. So debit credit minus from investments. Put tick on investments. Investments 20,000 minus decrease 2,000. So outer column 18,000. Are you okay with this? Other way around it's a loss. So revaluation it will come on debit side. And from 20,000, 18,000 means value of investments has gone down. So minus from investments. Understood that everyone? So this is the third step. After distributing the reserves, you'll take up all the adjustments of revaluation. Okay. Fourth step, you'll record unticked items as it is. Liability side, what is not ticked? 12% loan. Number it as 4. Write on liability side 12% bank loan 70,000. All unticked items. Bills payable 10,000 as it is. And asset side cash balance 30,000 as it is. So this is the fourth step. You look at all the unticked items. Okay? Any confusion in that? As it is. Fifth, balancing. Listen. Revaluations balance will transfer to partners' capital on opposite side, old ratio. Revaluation balance transfer to partners' capital account, which ratio? Old ratio. Partners' capital's balance will come on liability side and balance sheet must tally. So last step is balancing. Revaluation, debit is more
57%.
32, 42, 43, 53, 55, 57, 500. minus 14, 15, 16, 18, 900. So 39,000 by partners capital account. You will distribute it in old ratio. So Sajan 5 by 8, Nirmi 3 by 8. 39,000 into 5 by 8.
24375.
And 39,000 into 3 by 8.
14625.
Okay, 24375 and 14625. Any confusion in this? Opposite side in partners capital account to revaluation account. Two, 4, 3, 7, 5 and 14625. Okay, opposite side in revaluation, partners capital account to revaluation account. Now capital's closing balance we will write on liabilities side. 1,60,000, 98,000, 168 minus 24375 is
13565.
13.
135,625.
Is it 24375?
Yes.
And 1,60,000. 135,625 and 83375. Two balance carried down. And this we will write on liabilities side. Capitals. Surgeon 135,625. Nirmi 83375.
219,000.
Now 10, 80, 310, 339,500, 339,500. See, is it same on both the sides or not?
Yeah. Yes, same.
Understood that everyone?
Yes, sir.
Now last and here to be 11 entries will be there. Last entry will be for this loss. Debit side is more means it was a loss. Now no need to remember the entry of profit and loss. The loss accounts entry is partners capital to revaluation. No need to remember this. There is a simple concept. Be attentive. In which account is the loss on the debit side?
Revaluation.
In which account is the loss appearing on the debit side?
Revaluation.
It's on the credit side. In partners capital it is appearing on the debit side. So partners capital account debit. To be specific, Sajan's capital account debit with 24375. Nirmi's capital account debit with 14625. And in which account it is on credit side? So to revaluation account 39,000. If it's in revaluation debit side, then revaluation account debit. And in partners capital credit side, then two partners capital. Directly from the accounts you will get the journal entry. So below that 10th you will write 11th entry. In partners capital it is on debit side. So it's Sajan's capital account debit 24375. Nirmi's capital account debit 14625. And in which account it is on credit side? Revaluation. So to revaluation account 39,000. Are you okay with this? So this profit or loss entry, don't forget to pass it at the end after the balancing. Don't be happy balance sheet got tallied, hooray, over. One entry will always remain at the end. that will be of the profit or loss. Okay? That will be without fail should be passed. Being loss on revaluation, distributed in old ratio. Anyone who has done the total of journal?
Yes. 2,43,000.
2,43,000.
Yes.
So this is how you solve the long question. What is first step?
Balance.
Capital balance. Second step, reserves and fictitious assets distribution. Third step, revaluations adjustment. Fourth step, unpicked items. Fifth step, balance. Okay. And sixth is the last entry. Homework will be illustration 11. It is exactly similar. Illustration 11 is your homework. Tomorrow one more question we'll do in the class, which I'll ask you and solve it. So try illustration properly on your own. Same format. Bye everyone.